Good morning, everyone, and thank you for joining us today on today's webinar. So at 𝗪𝗪𝗄, what we're looking to do is we're looking to showcase, special CFOs and finance professionals, where we try to do this once a week or at least once every other week, where we get some industry experts to come in and give you some advice and to provide you some insights on what they're working on. Today's topic is leading through uncertainty. And what SMEs should prioritize first. So today's session is more around, obviously with the regional situation happening, there's a lot of pressure that finance professionals are going under, preparing cash flow forecasts, doing budgets, reports, special reports that they need to work on, and also supporting their businesses internally. And so we're very lucky to have 𝗪𝗲 to join us today on our webinar, where she can give you her insights into how she supports businesses and her expertise as well. We will have Q&A at the end, so feel free to ask any questions at the end of the webinar. Put them on the comment section as well. My name is 𝗪𝗲𝗄𝗏. I'm the co-founder of 𝗪𝗪𝗄𝗏. We are a tax technology business. We have a corporation tax product, and we're very close to becoming an ASP for e-invoicing. I'm also the founder of 𝗪𝗲𝗄𝗏 Partners. We're an accounting firm based in Dubai. Very pleased to have 𝗪𝗲𝗄𝗏𝗂𝗃𝗏𝗄 joining us today. She's a CPA from Down Under, Australia. She's a seasoned finance professional with over 13 years of experience across Australia and the UAE. She's worked for the likes of BHP, massive mining group back in Australia. And now she's a founder of Axion Advisory and works as a fractional CFO. Would you like to add anything else to that, 𝗪𝗲?
Thank you, 𝗪𝗲𝗄𝗏. Good morning, everyone, and thanks for joining us today. I think you did a very wonderful introduction. All I just wanted to maybe give a little bit more information about Axion. Axion provides fractional CFO and strategic finance support to SMEs, growing SMEs that need stronger visibility and decision support. And I'm also a DBA candidate doing a global strategic management with digitalization and sustainability focus. The rest were all spot on. Thank you.
No, thank you. So the DAB is basically more strategic finance. So you're more kind of into helping with strategy for businesses and boards as well.
Exactly, especially with businesses who are focusing on digitalization and sustainability as a basically transition into the new trends, which is very valuable in the current markets.
Yeah, no, with finance, it's super exciting. A lot of finance professionals, we go into the numbers, we think about debits and credits, accruals and prepayments, the reporting, but we don't always think about the top-down approach. So what do these numbers mean for a business? And I think that's very important as a finance professional, as a CFO, and also to help support businesses as well. So without further ado, I will let you take the floor. Obviously, we have this issue where I have to click on the slide, so just feel free to prompt me, and then I can then click on the next slides for you. So 𝗪𝗲𝗄𝗏, over to you.
Thank you very much, and thanks for your support with the slides as well. So again, thank you everyone for being here. I'm really pleased to join this conversation because this topic is one of the important ones nowadays, and it comes up again and again with SME founders and leadership teams, especially when conditions feel uncertain. What should we focus on first? So let me start with the central question for today. So we are still in the previous slide, 𝗪𝗲𝗄𝗏. Thank you. So most SMEs want, the same things. They want stronger cash flow. They want healthier profitability. They want continued growth and systems that give them visibility and control. So the challenge in the periods of uncertainty, most businesses cannot really focus on all four at the same time, or I better say with the same intensity at the same time. So that is why prioritization is becoming very, very important. So this session is not about saying one of these is more important than the other, because we all know that they all matter. It's just the question is what needs your attention first and in what sequence you should act. The main problem is that when the sequence basically goes wrong, and that's when more pressure is basically caused by the wrong sequence, and then the business can go often after revenues without margin. They push growth while cash is still tight, and they delay systems and reporting until the business is in serious issues. So today, what I want to give you is a practical framework for thinking through that prioritization is important, and all SMEs, they need to prioritize in a structured way. So can we move to the next slide, please? Thank you. So we will first look at how SMEs basically should think about cash flow, profitability, growth, systems, especially in uncertain period. Then we'll talk about the order of priorities, what tends to come first and why. And that part is important, and because many businesses are working really hard, but not always focusing on the right thing at the right time. We'll also discuss some of the most common mistakes that leaders make when they respond too quickly to the uncertainty. And in many cases, the issue is not the lack of effort. It's actually reacting in a way that creates more noise and less clarity. And we'll then look at the CFO mindset and how finance leadership can help businesses make better and faster decisions without even without having a larger finance team. And finally, we'll finish with a simple 90-day action plan that SMEs can use to build more resilience and structure. And obviously, I'm more than happy to answer any questions at the end of the session. Next, please.
Super excited to learn more.
I'm happy. Honestly, I'm really trying to keep it as practical as possible, not really theoretical. Just something that businesses can really use, next week to do some action plan straight away. So. Without going to the framework, or before going to the framework, it's actually worth grounding ourselves in some business context, because the reality in UAE and wider GCC right now is that we are operating in an environment that still has opportunity, but maybe it needs much more discipline, especially financial discipline. There are still pockets of opportunity across the UAE and GCC, but momentum has softened and businesses are operating with more caution, which is quite normal. And there is still strong activities across sectors like construction, real estate, technology, e-commerce. There is growth in the market. So the good thing is that we are not really dealing with a purely defensive environment. On the other hand, if we look at the operating environment, it has become more demanding. Businesses are dealing with corporate tax, with increasing compliance expectations. E-invoicing is coming soon. So these are all signals that that the businesses need to improve their financial discipline around reporting, around invoicing, and system readiness. At the same time, funding conditions remain tighter than they were in early years for SMEs. So many SMEs are finding that capital is more expensive, access to funding can be slower, and lenders are asking for more credible numbers, for more stronger controls, for better visibilities. So the key message here is, yes, growth is available, but it of course requires more financial management or sharper financial management, better visibility, and more deliberate choices. This is exactly why SMEs need to prioritize right now. Next, please. So this slide is really the backbone of the session. So the framework here is sequential. It's not random. So the idea is that most SMEs should think about these priorities in a particular order. First, we talk about cash flow. Why? Because cash flow buys you time. It gives you option. It gives you flexibility. A business can be profitable on paper and still runs into trouble if cash is not arriving when it needs to. Second, we're going to talk about margin discipline, because once cash is visible, the next question is whether the business is making money in the right places. Because revenue on its own, revenue alone is not enough. You need to know whether your work is profitable and which part of your business deserve more attention. Third, we're going to look at the systems and visibility. As the business becomes more complex, leaders need better numbers, faster reporting, clear visibility. Without that, decision-making becomes obviously slower and riskier. And then finally, when we know that we have good cash flow, margin, and systems in place, we go with selective growth. Growth should come from a stronger base. It should not come from panic or pressure, because the goal here is not to go bigger. The goal is to grow in a way that improves the business. So if I really want to summarize this slide into one sentence, I would say secure your runway, protect your margin, get visibility, then grow. Next, please. So for many SMEs, this is the single most important area, cash flow. So cash flow is the first priority. Why? Because it tells you whether your business has room to breathe. It is what allows you to operate with confidence instead of reacting with panic. One of the most useful tools any founder or finance lead can build is a rolling 13-week cash flow forecast. Nothing fancy. It's a very simple report, but it gives a lot of clarity and visibility to the business owners. And I'm not talking about a monthly P&L review, but a forward-looking cash view that helps you see the gaps before it becomes crisis. So the forecast should really help you answer some practical questions like, when is cash coming in? What payments are due and when? What happens if a major client pays late? And how much runway do we really have? The second part is receivables, because in many SMEs, cash pressure is not always caused by lack of sale. You know, they might be very active, they're generating revenue, but the problem is the delayed collections, weak invoicing disciplines, customers stretching payment terms. So this is the time to accelerate cash in where possible. And like there are examples of how we can do that, how we can accelerate cash in. You can just do maybe tighten your follow-ups with the customers, improve your billing discipline. You know, things that are very, it sounds very basic, but some SMEs are, you know, they're being ignored in some of the SMEs because the receivables, that there is no owners for that. I had another cash flow workshop before, and it was only for cash flow. And one of the most important thing was that the invoicing should have an owner, whether it's an operating manager, whether it's an accounts, whether it's the CEO, CFO, whoever that person is, they need to raise that invoice as soon as the job is done and they should be the owner of that invoice. They need to do follow-ups on regular basis, and obviously they need to be a billing discipline. So as soon as the job is finished, the invoice is out and it's sitting with the customer. At the same time, obviously, we need to manage cash out more strategically. We need to speak proactively with the suppliers, review payment timing, preserve cash where we can, but without damaging the relationship with the suppliers. Because here we are trying to preserve cash as much as we can, but the idea is not to damage the relationships with the suppliers and the customers. And if there are any funding lines available, like overdraft, invoice financings, or any credit facilities, it's best time to secure them before you enter into a distress or a crisis, not after that. And the bigger point is that when founders have clarity on cash, they make better decisions. And when they don't, they almost end up reacting to the situation, and obviously everything becomes harder. One thing that I really wanted to add to this point is that we all know that in UAE, the cash cycles vary significantly between sectors. So it's very much depending on the sectors. But this, when you have the level of clarity and visibility on your cash flow, and you have stronger invoicing systems, it really helps a lot. The Ministry of Finance invoicing direction is quite relevant, not just from the compliance angle, but from the better invoice structure, faster invoice handling. They definitely can support with the working capital and reduce frictions. Next, please. So once we have visibility on cash, the next big priority is margins, how to protect the margin. This matters because many SMEs stay busy, but they become less healthy over time. They win work, they generate revenue, but quietly they're losing profitability through discounting. So rising delivery costs, weak pricing disciplines, or low value clients, these are all reasons that it will affect the margins. So in uncertain periods like we are experiencing now, one of the biggest temptations is to cut price too quickly to get the sales moving. But that can damage the business in the long term. Obviously, it gives you short-term volume, but in long term, it harms your business, especially in competitive GCC market. Price pressure is real. But discounting is not the only way to leverage, because discounting sends a signal to the market that there is expectations that the price should be lower, because you are finding this, SMEs finding discounting the only solution. Instead of defaulting to discounting, businesses should ask which clients are more valuable, which customers generate the strongest margin, where are we seeing the margin leakage? Are we winning revenue that actually supports the business? So one of the critical exercise, or a practical exercise, is for SMEs to identify the top 20% of your clients that drive the majority of the value. Those are the clients that you need to protect first, but not only through service, but through proactive communications. And this is where flexibility really matters. For example, if you know a client is under pressure and they communicated that to you, what you do is, instead of going to them with a discount to cut price, you can offer them like an adjustment on the scope of work. You can give them maybe a package without undermining the value. You can maybe give them extended payment terms or structured payments or whatever it may be, but don't go to discounting as the first solution. So for SMEs in particular, strong relationships and margin discipline are often a better defense than aggressive discounting. This is what I believe works better for SMEs. So the message is to protect the client that matters, hold your pricing discipline where you can, and understand where your profit is really being created. So basically protect the margin and relationship quality at the same time. Can we go to the next slide, please? So systems and visibilities. This is the area that many SMEs delay because it becomes increasingly important as complexities grow. When markets become more uncertain, leadership needs better visibility, not more guesswork. And that visibility depends on the system. And when I say system, I don't really mean go and implement an ERP system tomorrow. I mean having a reporting, a dashboard, a workflow, and financial discipline that allow you to see what is happening quickly and clearly. For example, do you have a weekly finance dashboard? Can we clearly see overdue receivables? Do you know margin by clients, by project, by service line? These are all the practical questions that you should answer when we are talking about systems. And if you don't have these, that means you don't have a proper system in place. You need to see if you're forecasting an actual cash movements being tracked properly. If the answer is no, the business is probably spending too much time gathering the information, but not enough time using it. So for founder-led SMEs, especially, this is often where pressure builds up quietly. So reporting becomes manual, too much knowledge sits with one or two people, and decisions are made with incomplete information. So strong systems reduce pressure in two ways. First, they improve visibility, and second, they improve speed. And in uncertain periods, faster and clear decision-making becomes a real competitive advantage. And that's why systems are priority, obviously. Next one, please. So now we can talk about growth. Growth is obviously important, but it should not come first by default. It should really follow stronger foundation. In uncertain times, there is a big difference between good growth and expensive growth. Good growth improves the business. It comes from the right customers, right offers, the right commercial decisions. It supports healthy margin and it with reasonable cash conversion. Expensive growth does the opposite. It stretches working capital, overloads delivery, creates operational strain, and adds revenue without improving the quality of the business. So the message here is not stop growing, it is grow selectively. And that means asking practical questions before investing. What sort of practical questions SMEs can ask before think of selective growth? Will this new client or contract support healthy margin? How much working capital will this growth consume? Are we ready operationally? What is the payback period on this spend? And are we taking on complexity faster than we can manage it? So these are all practical questions that you need to ask yourself about analyzing your company's capacity before you select where to grow, where to invest. For SMEs, the discipline to say no is often just as important as the ambition to say yes, because most SME founders are quite ambitious. They want to say yes to any opportunity that comes their way. But the problem is that, as I mentioned, some of the growths are quite expensive, and it puts a lot of pressure on the working capital and on the business, and it may not end up being a very good growth. It may end up being so expensive and not in the right direction. So once cash, margin, visibility are in better shape, then the business is in a stronger position to make smart growth choices. Next, please. So this slide is one of the most important slides probably in the deck, because it changes how founders think about finance. Many SMEs still think of finance mainly in terms of compliance, VAT, bookkeeping, tax filing, year-end accounts. Obviously, all of these are essential, but the CFO mindset is different. It is forward-looking. A CFO is not really asking what happened last month. They are talking about future. They're asking, what is likely to happen next? What risks are building? What scenarios should we prepare for? What decisions should we make now to protect the business? That mindset includes forecasting, scenario modeling, margin analysis, investment priorities, and understanding the financial consequences of business choices. So it's really about helping founders answer what-if questions with more confidence. For example, what if our largest client paid 30 days late? What if we increase prices by 5%? What if we hire now versus 3 months later? What if we invest on this system, on this software? Will it actually pay off? So all these questions are questions that are, as you can see, there are a lot of scenario modeling. There are a lot of margin analysis on them. There is very forward-looking, and it really helps the businesses to understand the strategic side of finance, not just what happened last month, which is still important, but not strategic perspective of finance. So that is why a fractional CFO can be valuable to SMEs. They bring strategic finance capability without the cost of a full-time executive hire. So this slide is really about shifting finance from a reporting function into a decision support function. Especially in UAE, since the environment is becoming more structured, corporate tax basically, the corporate tax means businesses need clear records and more confident in, they need to be more confident in their numbers. When the invoicing, with the invoicing direction, the message is even more clear. Businesses are expected to operate with more reliable data and with more robust systems. So this is these are the facts. This is the operating environments that we are in now. So we need to be ready for it. So the CFO mindset is no longer a luxury. For many SMEs, it's becoming a practical necessity. So CFOs help businesses to have clarity, and clarity reduces pressure for them.
I like what you're saying, because one thing that I've noticed with many businesses in the UAE is that even very large businesses don't have CFOs, and sometimes founders and business owners, they try to put a CFO in a pigeonhole of an accountant when they shouldn't. I I very much believe that a CFO is a kind of like a co-founder, like a business partner that you can rely on and bounce ideas off, because they are the ones who can help you, ground you when you have those lofty ideas, and to kind of give you a bit more information when you're not acting, because obviously there could be situations where you're not taking action on certain scenarios where you don't know that you've got a cash flow crunch until you actually have no bank money in your bank account, but you can figure that out now by looking at your reports. And that similarly, you may have some grand ideas where you may say, okay, tomorrow I'm going to set up a new product line and we're going to sell to existing customers, and then you, the CFO, will run the numbers and you realize actually it's not making money. There's no point going into the business line. So yeah, no, 100% relate to what you're saying.
Yes, absolutely. And again, I really want to emphasize that, maybe if you compare UAE with like 10 years ago, if you look at the operating environment, as I mentioned, the corporate tax, the VAT, the e-invoicing direction, all of these are sending a signal to companies, especially SMEs in this part of the world, that they need to have reliable numbers. They need to have better systems in place. They need to be more robust. And I was listening to some of your earlier webinars where you mentioned an example of a business with around, I think, 100 million dirhams that they didn't have a CFO. They only had a CEO and a COO. And I'm not surprised, because I've seen clients as well here that they have a huge turnover, but they just don't see the need to have a CFO, which is quite shocking, to be honest, because in this environment you really need to have strategic finance support, not just a basic system, off-the-shelf system that like you put your invoices in, or like you're doing your bookkeeping on, and then you don't get any proper reports, no forward-looking reports. Everything is just just to tick the box that yes, we have finance. And it's becoming, as I said, it's becoming a necessity for SMEs to have someone with CFO mindset, with a strategic finance mindset. And this, the fractional CFO support for SMEs, especially because they don't need or they can't afford, and also they don't need a full-time executive hire. It makes a lot more sense, because they don't have the commitment of a full-time CFO, but they can use the services at a fraction of a cost and a fraction of time, which is quite beneficial for them as well. So yeah, it's a very good point, Rehan.
Do you want to go to the next slide?
Yes, please. Yes. So this slide usually resonates a lot because most businesses will recognize at least one of these traps. When uncertainty rises, the instinct is often to act fast, but fast is not always the same as a smart. So not always the fast response is the best response. So one common mistake is reacting too quickly. For example, freezing hiring or cutting spend without first looking at actual cash needs or delivery needs or the profitability impact. Another one is trying to fix everything at once. That happens a lot as well, because that spreads management's attention too thin and usually creates more noise than progress. The third one is cutting evenly across the board, like a blanket cost cuts, which often damage the business because it damages the parts of the business that actually was working well. Third one is cutting, and then there is over discounting, which can protect you short term. It can give you short-term volume, but obviously it weakens the margin and trains the customers to expect lower prices. And another big one is poor communication, especially with lenders, with investors or suppliers. If there is pressure in the business, it's much better to communicate it early rather than hiding it, because obviously most of the other companies are all in the same boat. So like better communication helps resolving a lot of issues as well. And finally is the concentration risk. Relying too heavily on one supplier, on one client, one channel, especially during the unstable environment, it's become more dangerous to rely on only one channel. So it's always best to diversify. And so what should we do instead? What do we recommend? We recommend to pause, to assess, and to sequence your response. Protect the profit engines, communicate early, diversify critical risks where possible. So in short, be precise, not panicked. So this is the message, that if SMEs react in a panic way, they most of the time harm their businesses instead of solving a problem. Next, please. So this is basically the final working slide where we turn the framework into action. And the reason I like this structure is because it breaks it down into manageable phases rather than overwhelming the business with too much at once. For example, in the first 2 weeks, the focus is visibility and reality. So build a 13-week cash flow forecast, set up a simple dashboard, review your clients, and understand where the real risk is. So this first 2 weeks is just focusing on the visibility and the reality of what is happening. In week 3 to 4, focus on quick wins. Accelerate collections. Pick up a phone, talk to clients. How can you accelerate the collections? Maybe give them a little bit of discounts on early payments, or follow up, accelerate in any possible way that you can. Stop unnecessary discounting, that's for sure. Talk to your key suppliers, see if you can have a better payment terms, and free up cash and create breathing room for yourself. Then in week 5 to 8, I would say that shift to systems and compliance readiness. Improve your reporting discipline. Automate, for example, one finance process, if you can. Strengthen your invoicing, strengthen your bookkeeping, and try to have better quality workflow. Again, I'm not talking about implementing an ERP system. I'm just talking about tools, reporting processes, and something that gives you a better quality financial report. Also, you can speak to your stronger clients and understand what their next 6 months would look like. And then in the last phase, in week 9 to 12, look at growth decisions more selectively. So this is the part that you need to review where to invest. You need to secure your banking relationships. You need to decide what support your business need to move forward with discipline, of course. And also, I really like the short weekly habits section at the bottom of the slide, because resilience is not only about big decisions, it's about repeatable routines. A short Monday cash and metrics review, a monthly finance check-in, and active communications with bank relationship managers can make a huge difference over time. If you have a better forecast, better invoicing discipline, a cleaner reporting, better visibility, obviously can reduce the stress almost immediately. And not because the market changes overnight, but because decision-making becomes less reactive. So if I want to wrap up, I would summarize today's session in 4 points. First, cash flow comes first because it gives your business time and options. Second, margin discipline matters because not all revenue improves the business. Third, systems and visibility reduce pressure by helping leaders make faster and better decisions. And fourth, growth should be selective, not reactive. So the goal is not to do obviously everything at once. The goal is to focus on the right priority in the right order. So that is how SMEs build resilience, not by panicking, but by creating clarity, discipline, and better decision making. Thank you very much for your time today. I hope this has been useful, and I would happy to take any questions. And then if I can just add some clarity on what Axion does as well, whenever it's suitable, Rehan.
Yeah, no, go for it. Blow your own trumpet. Feel free to do that. You've given us so much value, so of course we should know what you do and how we can contact you as well.
Sure. So obviously, very briefly, I support SMEs through Axion Advisory. Axion Advisory provides fractional CFO and strategic finance support for growing businesses that need financial visibility and decision support, but may not need a full-time CFO. In practice, that usually means helping founders and leaders with 13-week cash flow forecasting, working capital improvement, margin visibility, pricing discipline, management reporting, dashboards, and building systems that they need to scale more safely. So would love to connect with you all, and I'm on LinkedIn, and that's my email address, and yeah, would love to be connected, and would happy to support your business in any way I can. Thank you.
No, thank you very much for your presentation, Ellie. I mean, some of the things that I resonated and I thought was very important is the fact that discount shouldn't be your first knee-jerk reaction. Obviously, everyone asks for discounts here, and discount is a word that's used often in this region. I mean, what we've done at Alpha Pro is we've looked at scope rather than discount, and we've said, look, if you're not so busy as an organization, and we need to reduce our fees, we would look at the scope first and reduce it on that basis. And we've done that times as well, also to support our clients as well. But yeah, the methodological approach that you're taking is very important, because in this time you might just have some crazy knee-jerk reactions. Like, for example, I've come across some founders where they've gone through the whole COVID process. They went through COVID and they realized they got to cut everything straight away, right? I think the ones that decided to look at productivity first are the ones that are probably a bit more relieved in what they did, because obviously at that point we didn't know that there was an end to what was going on, but now things have improved, and now things are slowly. Obviously, not all industries are back to where they were, but having spoken to a lot of entrepreneurs, my gut feeling is it's about 20 to 30% reduction in business that's happened now, which is, it's not like COVID where you lose your business overnight for 3-4 months. So I think working on productivity has helped the ones that are focused on that. And, we've heard on certain media outlets that events is going to start again from the rest of this year. So it could be that Q4 is super busy. So you kind of want to make sure that you're prepared for Q4 as well. So thank you for sharing your insights. I think you give a calming approach to the whole this situation, and I think that's very important as a founder, having someone who's calm and who can look at things in a logical point of view and make decisions off the back of that. And I think that's very important. We have a few questions.
Yeah. Sorry, I just wanted to add this, Rayhan, that that's a very valid point. And I heard somewhere in one of the webinars or events that I was that was kind of interesting, that they were saying that crisis is not is a phase, it's not going to be forever. And obviously founders, we as human beings tend to react when there is a crisis, when there is a shock in the system. And founders are also human beings. Businesses are run by human beings, and it's very normal to like try to react. And the only thing is that when you are running a business, you are running a family of people, systems, and so many things at the same time. So you need to really breathe, you need to assess, you need to pause and think about how to approach this crisis, as you said, with calm. And the first thing that I mentioned, the first priority, the cash flow, is important because of that, because it gives you time, it gives you flexibility, it gives you options, so you can easily breathe and think and not overact, not go to discounting first, not to harm your business in the long term. So there might be solutions that are really good solutions short term, but you always have to think about the long-term effects of your decisions for your business as well. So crisis obviously happens, shock in the market, in the system happens, but it's a matter of how you reacting to that, how with visibility and clarity. And I think that would be the best thing to do when situations are uncertain.
Yeah, no, great points. Great points. So thank you for sharing that. We've got a question. This is from a gentleman called Adrian. He's asking, is there a minimum margin or markup percentage that would safeguard a business?
That's a good question, but it's really depends on the business, the size of the business, the complexity of the business. But in terms of a buffer, we always say that think about your operating costs, the cost that you have to run your business, and obviously it varies between different businesses, and then times that by 6 or minimum 3, and then have that as a cash buffer. So I would not think about margin, I would think about the buffer for you to run your business. So for example, if you have a 6 months of your operating costs sitting as cash, you have a cash buffer which is equal to 6 months of your operating costs, you are in the safe zone to be able to make clear and better decisions for your business. So that means that you don't have to rush to get more sales in with a thin margin, because we have good revenue and we have not so good revenue or bad revenue. The revenues that are in a very thin margin, that they're not really supporting your business, they're you did it because you wanted sale, and most of the time, because the cash flow buffer is not there, they go and get these sorts of revenues. They go and they are the SMEs are attracted to any kind of sales coming to the business. And that's quite dangerous, because first of all, your signal to the market is, yes, I am happy to do the job for a low value, which is again gives the customer these expectations that yes, the price has to be low, and at the same time, it doesn't support your business. It won't cover your cost, and at the end, you might not even make any profit out of it. So instead of going to margins, because margins are typically on a healthy businesses for SMEs are around 35 to 45%, or even 30 to 40%. But if you want to have a safe zone, I would go with cash flow buffer, and that would be around minimum 3 to 6 months of your operating cost as a cash buffer.
Yeah, that's a great answer. I think, like you said, there's no right or wrong answer. It all very much depends on. There's a lot of variables in place, not just
Yeah.
the margins. It could be cash flow, cash conversion cycle, as you said. It could be that there's other factors in play as well. But I like the fact that you mentioned that take a percentage, take a multiple of your operating costs, because I think that makes things a lot easier, especially for founders as well, for founders and accountants to kind of communicate that. Because as soon as you start getting complicated and you come up with so many different formulas and all of that, people just don't understand what needs to be done. And I think the way you've mentioned it in a simple ratio it helps owners and it helps accountants as well. We don't have any more questions. So I just want to say thank you very much for your insights. I think our audience will definitely get a lot of value from what you've provided. Any final closing thoughts from your side?
I just wanted to say thank you, Rehan, for having me. I think this topic is quite relevant and timely for SMEs, and I hope everyone found the session useful. And I really want this session to be a practical session for SMEs to basically start having some action plan and start with something simple. You don't have to go and solve all your problems in one go. Start with a 13-week cash flow forecasting. Start with reviewing your customers and suppliers contract, checking the payment terms, where you can negotiate more, and start with small and have more visibility and clarity on your numbers, and make sure that the numbers are reliable, and make decisions based on clarity and reliable information, and not through panic. Thank you again for having me, Rehan, and wish everyone best of luck in their journey.
Thank you very much. This recording is on LinkedIn Live, so you can view it again on LinkedIn. It's always available. So yeah, thank you very much, everyone. Have a great day.
Thank you. Thank you.